Today, I'm really delighted to invite to this podcast a friend of mine and someone I've known for over 20 years, Mr. Phil Story. Phil has incredible experience in the offshore market. He currently works as a product provider for one of the main players in the business, but he's also been an advisor and a client. So, Phil, welcome to this podcast. Perhaps you could start by sharing a little bit about your experience and background, please.
Yeah, thank you, James. Yeah, no, a pleasure to be here and delighted to be able to take part in this podcast. Background, I think over 30 years, or just coming up to 30 years actually, in the financial services industry. Started off in the UK, having left university and managed to get a job in the financial services industry. And from there, that's taken me all around the world over the last 30 years, both sort of Europe, Middle East, Asia, from a living and working perspective, plus also Africa and other places from a tripping into. I've in the last 23 years been based mostly in the offshore space, and as you mentioned, as a product provider, providing solutions for clients with regards to their savings, investments, and so on.
Okay, great. Well, look, thank you very much for sharing that. I mean, as you mentioned, both you and I have been involved in the advice market for expats and international people for 30 years or whatever. And during that time, we've obviously seen some incredible changes, with regards to opportunities and investment choices. Can you sort of give us a brief summary as to how things have changed in the last 20 years in particular, and why perhaps this market is still such a growing market, and perhaps an exciting market, and also a lot better value for money for clients today than it was perhaps when you and I started out in this industry 20 years or more ago?
Yeah, absolutely. I mean, I know when I first started, the product solutions that were there were very simple. You may be talking like the old with profit endowments and simple endowment savings contracts that sort of came out of the UK, that had very limited options, maybe with limited fixed returns, and with sort of very opaque charging structures. And there was nothing online at that point, of course, to be able to check all of these things and trace them and track them and see how they were doing. So it was at that time, it was very different. Obviously, what we've seen over the last 20 years is a massive change in what's available. Obviously, the internet and technology has helped drive that through, obviously, the transparency that people have nowadays. You can go online and look up investments and savings and find different funds online very, very simply now. But it's also been driven by the regulators as well, making sure that obviously the good value for customers at the end of the day is there. And that's, I suppose, driven mostly out of Europe initially, but then that's been driven globally now, both by the regulators, but also I think by the companies themselves that provide the products, making sure that they're providing the best value products they can. And then you get new companies coming into the market, like the one I work for, Investors Trust, who then try and shake up the market a little bit, and obviously have to come in and make sure they're priced at a very competitive pricing point as well, and just increase that competition. And as we all know, just from a very simple economics background, the more competition there is, generally the better the product will become, and the better the pricing will become over time as that competition finds the most optimal way of doing things.
Okay, I think that's actually really interesting, Phil, and a couple of points that you touched on there, which I think are very relevant, is that you were saying that now the products are a lot more opaque than they were nowadays. And I guess one of the perhaps the most powerful instances of that is the fact now that, in the old days when you and I started, I would suggest that probably a high percentage of the savings policies were sold contained an insurance element, which meant it was quite difficult for clients to track how their investments were actually performing. But as you say, I think now with technology and obviously the ability for clients to monitor things through the internet or whatever, I think the product structures themselves have changed significantly to make it much easier for clients to see how these sort of products are performing, and as you say, give them better value. Would that be a fair comment?
Absolutely, yes. I mean, as you say, in the past, a lot of these products were wrapped up into one big bundle they tried to achieve everything with. I think nowadays, same as in a lot of businesses, it's stripped out back to the basics, if that makes sense. So you have your protection in a protection product, you have your investment in an investment product, you have your savings in a savings product. And that way you can therefore target exactly what you need, not just having one thing to try and achieve everything. What that also then means is you can see more clearly exactly what the charges are for each product, you can see what the returns are on each product, and so on.
Yeah, no, I think that's a good point. I mean, I still get asked by clients sometimes, or prospects today, is that couldn't I put all these, couldn't I put all these elements of what I require, like savings, pension, school fees, and insurance, into one product? And I think the simple answer really is no, as you say, because it's better if you have, a specific product for each of those requirements, because as you and I know, the savings needs may change, whereas the life insurance needs or the protection needs are going to be constant for a longer period of time. And that flexibility to be able to either sort of reduce or increase your investment opportunities, I think, is one of the benefits probably of the new products that are out there, for instance, that, people like your company market.
Absolutely. And I think the key thing with that is if you have a product that's focused on the investments and savings, then they're going to have much better fund choices. They're going to be able to review those funds and make sure they're performing and make sure they have the best performing funds on their platform. They're also going to create more flexible products that, as you say, nowadays people need. In the past, someone might take a job, and then they'll be still there 20 years later. Nowadays, I think the average job sort of expectancy is like about 5 years. So people jump around a lot more. And particularly in the offshore space over time, I think things generally, people are on shorter term contracts. But as we've seen now with a lot of the golden visas in a lot of countries now, people then do settle down, they do stay for longer. So having flexibility built into these products is vital, I think. Whereas if you have one product that tries to do everything and has no flexibility, then obviously that restricts what a client can do at the end of the day.
Yeah, I think that's a great point, actually. And in terms of, how we've seen the market move over the last 20 to 25 years for sort of international people working abroad. I mean, obviously when you first moved out and I started getting involved in the business, I think it's fair to say that a lot of people probably came out on a more short-term basis. And in the sort of the 90s and the noughties, many people came out with very different packages to what you see today. So generally, people would come out and they would be able to continue their pension scheme from whether it was, Europe, the UK, the US, or other countries. And also they relied heavily on government pensions as well, and potentially paying into government pensions back in their home country. Obviously with, the global financial crisis and now governments being in debt and companies being more streamlined, how do you see that's changed the mindset for people or international people who live and work abroad with regard to savings? Do you think people still should put a big emphasis on, company pension schemes and the government to support themselves, especially if they're now more naturally going to be longer term expats?
Yeah, it's a good question. I think you can probably break it down into a few areas. Obviously, with the government pensions, as you quite rightly say, the governments are cutting back on these. The benefits in the UK, obviously where we're both from, obviously the retirement age is being pushed higher and higher and higher. There's more restrictions being put on it, etc., etc. But what they're also trying to do is create more flexibility with some of the laws around that, with what you can do with the schemes when you actually get to retirement. But so yes, there is definitely restrictions on that. So I think clients do 100% need to do additional saving on top of that. I don't think a government pension in the UK, for example, or probably in a lot of countries, will be sufficient for a lot of the offshore clients to retire on. If you look at the amount that it is, if you just look at how much they're earning, maybe in Dubai or Singapore or Hong Kong, and then you relate that to what a UK pension would pay them, it's nowhere near. And so there's going to be a massive fall in that. However, I would say that it is vital. One of the things I did when I first moved offshore was to make sure that you do maximise the government options that are available to you. So whether that's in the country you've moved to, and if there is some sort of arrangement you can move into there, where I was in Singapore, I joined into the pension scheme there, and it made sure you put what you can into that. But also, when you're for us as a UK, you have the UK home country government scheme as well, and again you need to maximize that and make sure, for example, with me as an offshore person, you're paying your class 2 contributions to make sure you're getting your full entitlement to that government pension when you do retire. So that's probably one of the key things around those government options. Although they are becoming less, it still makes sense to make sure you maximize the benefits you can from those schemes.
Yeah, I mean I think that makes a lot of sense. But I guess as the other thing is that for those who perhaps go and work in somewhere like, Singapore or Asia or the UAE for a long period of time, and maybe they want to retire early because hopefully they're on better packages moving abroad. I guess that a lot of people, or some people, will maybe not immediately go back to the country where they came from. So I guess that option of having savings outside of, let's say, somewhere like Europe or the UK. So if when people initially retire, they want to spend the first 5 or 10 years, maybe traveling around a bit, perhaps using places like the UAE for a golden visa or other countries, that ability to also save into offshore schemes could have tax benefits for them as well. Would that be fair to say?
Absolutely, and I think, well, it's not just the tax benefits; it's the savings benefits as well. I mean, yeah, I say the government schemes obviously are useful to have, but that's never going to be enough for most offshore people to retire on. So I think from that side, you've got to be 100% investing into something else alongside that, as a savings scheme or as a pension scheme, whatever you want to call it, to make sure you're maximising all the benefit or maximising your retirement when you get there. And as you quite rightly say, a lot of people who are offshore, you mentioned earlier the variety of um, terms that people will be investing for, if that makes sense. I moved offshore 20 years ago now and promised my wife it would be a 2-year stint, and we're still there 20 years later. So you need to have that, I think, offshore pension to be able to cater for that flexibility with regards to people staying offshore, maybe as I have and you have for a long time. And as you quite rightly say, you can then use that wherever you then do retire, whether that is the UK, whether it's Europe, whether it's Asia, wherever it might be. The offshore pension gives you the flexibility to draw down that money wherever you might be at whatever time you want it as well.
Okay, thanks for that, Phil. So obviously, in our industry at the end of a year, as you know, everyone gets very excited about how the markets have done and stuff like that. Plus, often people use, Christmas and the New Year as a time for reflection, and thinking, obviously not only just spending time with their family, but perhaps thinking about what their goals and their aims are for, the new year 2024. Which is obviously rapidly approaching. So when people sort of sit down and think about their finances, especially in the international space, what do you think are the key things that they should be thinking about, when they review, perhaps things that they're looking to do, which are new, but also perhaps even more importantly, reviewing what they already have?
As you said, Joe, New Year psychologically, I think is a great time for anybody to do the review, whether that's your business planning for work or whether it's your sort of financial planning for home or your goal setting for home, whatever you want to achieve for the following year, your health kick, what's it going to be? So I think psychologically, it's always a great time to do. I think obviously the reviews, obviously where they should focus and everything else. That depends on the goals and whether there's been changes in your life at that time. Maybe there's been some new children, maybe there's been a change of location, whatever it might be, change of work. Obviously, any of those things should lead you to do a review anyway at that time. But obviously, at a yearly event, obviously it's a nice time to be able to sit down with your advisor, make sure you're on track for those goals. Has the fund performance been doing it? The funds that you've been invested in, has the performance of those been good enough to meet those goals? Do you need to make any changes to that? So those would be the sort of things that I would focus in on, making sure that the goals are still achievable, making sure that the investments are there to be able to help you achieve those early retirement goals or education funding goals, whatever it might be.
Yeah, I think that's interesting that you say that, because you're right. There are a lot of things that I think that clients and prospects need to consider, from whether their circumstances have changed, as you say, whether they may consider buying a second holiday home somewhere, and how their finances going to be able to afford that, whether they've had additional changes or changes in their family in terms of additional children or other things that have happened. And then I guess the other thing as well is that, probably for the last 10 years, inflation's been very low. So people haven't probably been worrying too much about the cost of life increasing, whether it be food or rent or whatever. But I think it's fair to say that, over the last 18 months or more, we've seen significant increases in the costs of living almost everywhere in the world, and in particular in the main expat locations, like the Gulf, Asia, and also Europe. And I think that's perhaps another good reason for people to, review their finances. And I'm sure you're hearing this as well. We've been speaking with many fund managers at the moment who have been thinking that maybe US interest rates have peaked, and that perhaps in the first or second quarter of the new year 2024, we may see a decline in interest rates. So I think it's always worth clients and prospects having a chat with an advisor or a coach to understand whether that means that they need to also make some changes in their investments. I mean, as a provider, have you seen a lot happening from clients recently in terms of switches into new funds or anything like that?
Absolutely, yeah. I mean, you're quite right there. I think there's a lot of things that have been happening over the last few years. We've seen, obviously, with what's happening in the world at the moment, whether that was the COVID, obviously with Russia and Ukraine, whatever. All of these have a massive impact on global finances, particularly with the inflation and so on. And it's hit, as you said, hit people enormously. Whether that's on the mortgage side of things, obviously the cost of those going up, and the cost of living issues with that. But also, on the flip side, what it has done is created a lot of opportunities for the investment. So on the investment side of things, one second, James. So the guys are just stacking up one of the bars here. On the investment side of things, obviously the opportunity with inflation and interest rates rising has created a number of different opportunities in the market, whether that's for fixed income type arrangements. But what we've also seen a demand for is some of the fixed deposit type schemes that we offer, sort of annuity type schemes, where you're allowing those clients now where interest rates were so low for so long and the annuity rates were so low. Obviously, that was for retirees or people going out to retirement. It was quite worrying, obviously, with the annuity rates being so low. For those clients now, there's a great opportunity, as you say, to lock in at a rate where they've not seen for maybe 10 years on the annuities, on the fixed deposits. So for lower risk clients who want to take away some of that risk of the markets and the investments and so on, potentially that's what we've been seeing, and obviously a large increase in those sorts of lower risk, maybe lower to medium risk type investments. Has definitely been seen from what we've been looking at. Yeah. The other point you make there is obviously around the peak or not. And as you quite rightly say, obviously there's a lot of commentary in the press at the moment about that. But again, that then probably comes down to risk profile of the client and saying, do you want to take a risk on whether that is the peak or not? And are there going to be any other shocks to the system? Obviously, for lower risk clients, maybe it's a good time to look in.
Okay, well, look, carrying on with the review process, as it were, you and I obviously are aware there are many clients out there who will have accumulated lots of different things during their lifetime. These would be pensions from work that they've done maybe in other countries or whatever. And the temptation, I think, for a lot of clients is always to assume that because maybe they're busy as well, that the pensions that they've had and left behind will look after themselves, and that when they get to that retirement age, there's no point in moving those pensions and just leaving them there. But obviously, as you and I know, the industry over the last 2 decades or more has seen a lot of consolidation. And I think one of the problems that many clients have is that clearly, obviously, it's quite a lot of work to go back to your pension scheme and find it. But generally, as things change, there can be better opportunities for these people to at least review what they have, check that it is performing in line with their expectations, make sure their contact details are up to date. But realistically, I would say that for a significant percentage of those kind of people with these sort of, how can I say it, these schemes that they've had from many years ago, probably these need to be reviewed as well, because there could be better opportunities for them. Would you think that's a fair comment?
Absolutely, yeah. I mean, as we spoke at the very beginning, some of these older products that clients would have been in, whether it's a company scheme or whether it's an individual private arrangement, would have been quite restrictive back in the day and maybe not have the options that are available now. If they're sat in those and those funds are not performing, they've not been reviewed, they're not being actively looked after by anybody, then obviously that could potentially reduce the returns and the money that a client would have when they get to retirement or So 100% need to make sure that you're reviewing them, make sure that they're up to date, make sure you've got the best product available. Now, obviously, some of those, some products might be doing very well, but the most important thing is to make sure you have a list of those and you make sure you don't lose any of them. You always see the news stories, don't you, in the press, of people not keeping track of where all their investments are. I know personally for myself, I keep a list of everything. I make sure that everything's logged in. Obviously, everything's online now, so you can access it online. I make sure I have a list of that in the safe with everything, so that if anything did happen to me, my wife, or the kids, or whatever, they know exactly where it is, and they have access to that, and they can review it with their advisor. And that would be the second point. Make sure your advisor, make sure they know exactly where everything is. If you as the advisor, James, don't know the full picture, I think it becomes very difficult for you to be able to make sure you're advising the client correctly on everything. So making sure that your advisor knows exactly all of the benefits you have from previous jobs, previous history, obviously that's vitally important as well.
Okay, well, look, that's great. Thanks for sharing that as well. I think that really emphasizes the importance of reviewing things on a regular basis. Whether you do it at this time of the year or another time of the year, I think doesn't really matter. But obviously, as you say, it's important that you keep up to date with financial arrangements that you've already made either now or in the past. So coming on to a different topic, obviously, as you've mentioned, you're now working with Investors Trust. Can you give us a brief idea as to what you guys offer in terms of savings and pensions plans, and how you've really sort of, I would say, revolutionized the offshore market?
Yes, of course, and very kind. Thank you very much for that. I think we have. I think one of the reasons I joined was I saw that it was a new breed of offshore provider, focused very much on the sort of the technology-driven side of things. Using technology, one, to make things more accessible to the clients, make sure it's easier to understand, make sure it's easier for them to track and trace, as we just spoke about, but also to make sure it runs as efficiently as possible. And with Investors Trust, I mean, we've only been going 22 years now, so we were really founded just at that time of the tech boom, around the early noughties. And our owners were very much focused in on that technology side of things and wanted to make sure that they were at the forefront of that. And I think that's helped us over the last 20 years to grow so fast, with regards to that technology. The second thing that technology has allowed us to do is to make sure we can focus on the service. So if you have very efficient technology behind processing everything and making sure you can do things at 10% of the time that some of our competitors are doing, it means you can then focus on the service and looking after both your advisors like yourself, James, and the guys at Astra, but also the clients as well, and making sure that they're getting everything that they need on time when they need it, etc. So I think that's one thing that we've done very well. The other bit, which I think for the offshore space is vitally important, is the languages side of things. When we first created the company, or when the owners created the company, one of their things was that they wanted it to be in multiple languages. They started off with Spanish, Portuguese, and English, and since then we've added Chinese, Japanese, Korean, Russian, etc. And that is both online and offline support. So clients can see things in their own language and understand it better, rather than just being forced to do it in English. Down in Brazil, for example, where not that many people would speak, maybe they would probably speak English, but they would understand the technology, the terminology maybe within some of the contracts. So I think making sure things are clearer and more transparent again provides better solutions for clients at the end of the day. That's the high level bit, and I'm sure we'll talk about the product solution side of things in a minute.
Okay, well, yeah, I mean, thanks for that. Obviously, clearly, as you say, having those things like technology and a good service and stuff is really important. But I think also the technology has helped, companies like you cut down on the costs, which often, mean that the clients get much better value for money, as it were. I mean, I guess also one of the questions that I'm asked a lot, about companies like Investors Trust. So obviously, as you've said, one of the benefits is that you're now doing this in multiple languages, as are many other companies as well. But a lot of clients and prospects won't be familiar with companies like Investors Trust, and they'll say, well, why don't I go to Fidelity or BlackRock or someone like that? They're going to be much stronger, and everyone's heard of them. So what would be your response to that? Because my understanding is really that, clients who invest with companies like yours are pretty much going to get exactly the same security and guarantees that they would with any big bank or you company like Fidelity or BlackRock. So can you just tell us a little bit about the security that clients would also get investing into your type of products?
Absolutely, yeah. I mean, it's 2 points. Probably the key one here is one around the security. So we set up it's called an SPC structure, a segregated portfolio company. But basically, in practice, what that means is all clients' assets are held separately to the company assets. So, and those client assets are held by independent custodians, global custodians, and we use two of the largest banks in the world for those as custodians. You can see them online on our marketing information as JP Morgan and Brown Brothers Harriman, and effectively, so we just manage that money on behalf of the clients and make sure that it's safe and secure and invested how they want it to be invested. The second point is what you came back to, that what you mentioned there, James, as well. I mean, you could go to any one of these individual fund managers and just invest in their fund. But what we provide through some of our products, through the savings products, you can get up to over 400 different fund choices. If you go through some of the lump sum products, you have access to the whole market. So you could have investments with both Fidelity, Franklin Templeton, JP Morgan, BlackRock, whoever it is, through us. Whereas if you go to one of those fund managers by themselves, obviously you just get their individual funds as well. And obviously, as a large institutional player, we're getting the institutional rates of return from those, the institutional charging rates. Whereas again, if you went as an individual customer with just your money by itself, even if that's $250,000 or $1 million, that's not the same as investing 100 million. So you don't get those same discounted benefits as well. So we can pass those on, as you quite rightly said, one, through the savings of the efficiency of the systems, but two, just by being the bulk buyer effectively on behalf of the clients.
Thanks a lot again for that, Phil. I mean, I think one of the things that we can clearly see is that over the last 2 decades or more, the market for sort of international savings products and pensions has changed, dramatically. That it, really it gives clients a lot more better value for money and a lot more opportunities. And I think you and I know that still for the majority of people, the easiest way to build up capital for the future, is by putting money aside on a regular monthly, quarterly, or an annual basis. And I think in the past, when people struggled to do this because, the plans didn't offer good value for money and they were locked in for long periods of time to really get any benefit, I think the new breed of sort of savings and pension plans that companies like yourself offer basically take a lot of that worry away from clients now, because even if they need to reduce or stop paying for a short period of time, provided the contract's being correctly set up, based on what the client's needs are, they're still going to get good value for money out of these contracts. So I think, for people out there who are listening, if you're thinking about starting some savings or increasing your savings in 2024, the good news is, as you say, that the products out there are so much different and so much more advanced, and they give so many more choices to the older products of a few decades ago, that this is really a great opportunity for people to sort of start building up wealth for their future, whatever it might be, buying a house, retirement, school fees, needs, or whatever. So Phil, I'd really like to thank you for your time for this podcast and for your thoughts and obviously the knowledge that you have as well. Are there any final points that you'd like to share with the audience before we sort of sign off, as it were?
Yeah, a couple of things. I mean, I was just thinking when you mentioned that last point there around the choice of the products, and you're quite right. We sort of focused on it a little bit at the beginning, and I think the key thing here is it's finding the right product for the right client, isn't it? Whether that client is maybe more on a consultancy type basis role, so they need the flexibility for their savings product, or whether it's a client who's maybe a bit of a lower risk client. They don't like to see the ups and downs of the market, so maybe they want to have a guaranteed product that's going to give them a guaranteed return. All of those things are available nowadays, through ourselves or whoever, is the first point. And second is to make sure you then have a good advisor who's going to provide you with all of those options. Your advisor should know, this is an example that's been used a million times, but your advisor should be like your GP. They then bring in the specialist, they find the right product, they find the right solution and get it for you as the client at the end of the day. And if you have a good advisor there that can bring you the best solutions from whichever company that's out there that gives that product that is best for the client, that's probably the most important thing. So making sure that you have that good advisor who's going to make sure everything's clear, documented, transparent, and clearly understood as well. The most important thing I've seen in 30 years in the industry is if a client understands exactly what they're doing, they understand the benefits of it for them when they get to do the savings, they'll carry on saving and they'll make sure they achieve those goals. So for me, probably the most important thing is just to make sure everything is fully understood.
Okay, well, look, thanks a lot for that, Phil. And again, I really appreciate your time. And thanks, also to our audience for listening in. I hope you found that valuable and useful. And, if any of you got any questions, please feel free to reach out to us on the usual channels. And happy to set up a call to, discuss options around savings and pensions. So, Phil, I'm going to say goodbye. Thank you very much for your time. And I wish you all the best for Christmas and the new year.
James, thank you very much. It's been a pleasure and delight talking to you. And I look forward to listening to it back when it comes out. Merry Christmas, everyone, too.